Hello everyone, selamat petang. Hey, I am back, Uncle Robin. So, welcome semua to another episode of Financial Freedom Series with me lah, Uncle Robin. So, by the way, a long time no see. Got miss me or not? And how is everyone? Especially how was the Raya celebration? So everyone, if you have any comments about your Raya celebration, then you can always type in the comments saying that good. Makan banyak, also duit raya banyak. If duit raya banyak, then you are in the right place tonight. So most importantly, hope everyone is safe lah. If yes, let's sit back, relax, and get on with our episode tonight. Because tonight, the topic really gempa bumi punya topic, I tell you, because it's affecting everyone, especially Malaysians, Because uncle, the other day, uncle go out and eat a long time no go out eat, the price increase. Then go pump petrol, petrol price also increase. This increase, that's increase. So what is actually going on? Is it inflation? Uncle also want to find out. I think you also want to find out because it will affect you, ma. So tonight, we've got a very special guest. These guests are not only handsome and capable. He is a certified financial advisor and also the co-founder and director of Ringgit Plus. Let's welcome Han Liu. Yes. Hi, Han.
Hi, Uncle Robin.
Hey, hi. How are you? How are you?
I'm good, thanks. Hi, everyone. Evening.
Makan already?
Yeah, I just ate. Feeling good.
Nice lah. Very good, very good. So, is this your first time with on Astro AWANI?
Not my first time on Astro, but certainly my first time with you, Uncle Robin.
Nice. So, please go ahead and just introduce yourself a little bit. Tell a bit about yourself, what you do, or maybe your hobby, or is it you still single or married? Maybe for people that are watching, they're interested, don't know lah.
Sure, Uncle Robin. Hi, everyone. My name is Han. I am married with 2 children, unfortunately, for the single ladies out there. But I am the co-founder and director of Ringgit Plus. So thanks, Uncle Robin, for the introduction. Ringgit Plus is Malaysia's #1 online financial marketplace. You can find out things about financial products on Ringgit Plus, learn about financial lifestyle, how to improve your money and get more from it. I'm also a CFP, a certified financial planner, which means I help people with their money to save money, to borrow better, to invest better, and retire comfortably. So that's kind of, in short, what we do.
Wow, very nice. So for those who celebrate Hari Raya, if you got the Raya, Ang Pao, or Duit Raya, so yes, you are in the right place to maybe even look for Mr. Han Liu here and maybe seek some of his advice on some investment and how to plan your money properly. Now, but tonight's topic, I think everybody will be interested one. In short, one word is inflation. Because I think rakyat in the public now, they're talking about the rise in price of goods and then lately chicken price also go up, oil price also go up. People want to do house renovation, the price also increase. Actually, what is happening to Malaysia?
You hit a very, very sensitive topic for everyone, I think. Like whenever I mention the word inflation to our members or our clients, people get very, very upset, very angry. But I think it's important to understand what drives inflation, what drives our economy actually. And for that, there's 2 parts to it. The first, obviously, is global stuff. And then the second part is the local Malaysia specific things. In the global world, I think, there are 3 or 4 big things happening, trends, which are happening in the world, which are impacting our economic situation and inflation, right? Number 1 is the pandemic recovery phase, which is, during the pandemic, everyone shut down, business also, they let go of a lot of people. Now people are coming back to spend, going back to travel, but businesses are not ready, which means what? Which means they cannot cope with the demand. So in order to in order to manage that I cannot cope with the demand, I have no choice to increase my price a little bit, given my lower supply. So therefore, less people hopefully will use my product or service, but I can still make money, right? So that's the first. The recovery happened too fast for people for businesses to keep up with demand. So demand is more than supply, inflation will rise. The second big trend, I guess most people will have heard of this, is what's happening in China, where COVID has gone back into China. It came out, now it's gone back in, and they decided to lock down many big cities. The biggest one, I guess, most people will know is Shanghai. So what's happening there is that Shanghai is a big port city, right? And lots of ships go and take goods and take products and move it across the world. But the whole city is locked down for 2 months now. You cannot process the ships fast enough, right? Ships will get stuck in the port, right? Which means there's not enough ships to ship all our things around the world. And then therefore, it gets more expensive to ship things around because there's just less ships, right? So you have to pay higher to confirm a ship from one place to another place. Let's say I want to buy things from overseas, it will get much more expensive by nature because shipping becomes more expensive. And as you know, China is a big global factory. So whatever happens in China affects the world in terms of inflation. And I guess the last big kind of trend happening is, everyone knows this also, hopefully, is the Russia-Ukraine war. I won't talk so much about why the war is good or bad, but what I will say is, because Russia and Ukraine are both big producer of food, you can think wheat, corn, soybeans, but also big producer of gas and oil, so natural gas and oil. So these are things which we all use, right? Whether we eat it or we pump our car. When two countries are at war, they don't think about making more of the products, and therefore it gets expensive for everybody. So these are three big trends impacting global food prices, global oil prices, global products prices, and therefore us lah.
Yes, Han. So you actually point out very macro points just now, which is actually a good start. So for people that are with us tonight, you got any question, you can always type in the chat box, and then our handsome Mr. Han Liu here will try his best to actually answer them. Now, Han, you talk about China, you talk about the war, but Uncle also got one question. Uncle also saw on the news, US, right, apparently they have the highest inflation rate in the past, let's say 40 years, and their market is crashing. And for market crash, and then see cryptocurrency also crashing and all these kind of thing. So does US actually impact Malaysian economy as much as what you mentioned just now, like China did, or even the war?
That's really good point. I think what a lot of people don't realize about the US market, right, is that actually a lot of global companies who become big, whether it's a US company or a Europe company or even China company, when they grow big, they want to go listing in the States, in US, because that's where all the investors are in general. So when you hear things like the stock market is down in the US, it actually affects all of us, because a lot of big companies, even out of Asia, actually are listed in the States, which means things that happens in the States affects us. Now, US inflation is very high, 8% plus, right? So the question most people ask is, but then I heard in the news last week, in Malaysia, it's something like 2.3. What's the difference? How come the US people are experiencing so much? We feel it, but how come the official number is so low? For me, one of the big drivers is that internally in Malaysia, we are, I don't say fortunate, but it just so happens that we have policy that involves subsidizing certain things, such as food, such as oil. Not all food and not all oil, but certain types of food and certain types of oil are being subsidized. Therefore, we don't feel it as heavily as those big market players like the US.
So we will touch on the subsidies on oil and food later on. But okay, one thing that actually not a lot of Malaysians they don't like, for example, that let's compare ourselves, Malaysia to our nearest neighbor, Singapore. So Uncle found out that as of, I think, today or yesterday, US dollar against Malaysian ringgit is at 4.4-ish. While I think 2 or 3 days ago, Singapore against Malaysian ringgit is at an all-time high. I think it was around 3.2%. So with all the macro elements or reason that you mentioned just now, so does it actually play a factor into this currency? Because normal Malaysians, right, they may not know about what is happening globally. So they always use currency as a benchmark. Ayo, drop again against Singapore dollar. Ayo, very kesian, very kesian. So is our currency also a good indication of how our economy is actually performing?
Yep, I think you said it right, Uncle Robin. I think whenever I talk about the ringgit versus Sing dollar or US dollar or pound, a lot of our members or investors also give a big sigh and go, looks like it's going down again. And what I'll say is, it is extremely a very good signal for the international view of our economy. And I'll tell you why. I'll tell you why in layman's terms as much as possible, right? If there is good economic activity in Malaysia, then there will be natural demand for ringgit. Why do I say that? Because even if you are a MNC multinational operating in Malaysia, right? If there's a lot of growth in Malaysia, you will have more employees in Malaysia, which means you have to pay more ringgit. As an MNC, how do you get more ringgit? You have to sell your dollars, you have to sell your Sing dollar, you have to sell your pounds to buy ringgit to pay your staff, for example. Classic, just simple example of what it means to create demand for ringgit. So I think the weakness of our currency is driven by a lot of things, but the main point there is that there is not enough demand for ringgit, right? And the only way to stimulate demand for ringgit is to have high growth economies, right? And that's more of a policymaker problem, not so much of what we can do as consumer on what we can do as a rakyat. It's more of we hope for the best economic growth that we can have to increase the value of our ringgit. That's all. And it really matters in the context of inflation. Why do I say that? Because in Malaysia, we look like we got a lot of land and farms, but actually we import about 30% of our food requirement, which means we only produce about 70+% of the food that we eat, right? So that means if we're importing food, when the ringgit drops, our food becomes more expensive. As simple as that.
Now, this, whatever you have said, flow nicely to the next question that Uncle Robin have one. So you talk about food and you talk about in order to strengthen the Malaysian ringgit, we must have good or healthy local economic growth. Uncle understand, correct me if Uncle is wrong, petroleum is also one of Malaysia's main export, I would say. So correct me if I'm wrong. So, I mean, looking at the current situation, globally, the war and some other areas, they are also struggling. Would our petrol price fetch a better price when we export? Because I am asking this, that the other day, Uncle go and pump petrol. The petrol now for around 95, I think it's about $2 and $2.05 per liter. So it has already increased. What is actually happening? Is it that the subsidy for petroleum for petrol has gone down, or actually what is happening? Maybe Han, you can deep dive a little bit and talk about this.
I most certainly can. I think it's a very, very sensitive topic again for Malaysians. Every time I talk about petrol price, people start getting angry again. But let me try and explain what's happening out there. I thought we have Petronas. I thought we are oil producing country. Shouldn't it, when oil prices go up, we should be happy? I think it's a very complex situation, right? There's two things to this. For oil, for crude oil, right? We are actually a net importer these days, even though we have Petronas. Part of that is because our population is growing and we're using more and more oil, right? So even Petronas cannot cope with what we are using. That's on the oil side. The other big byproduct or the other big product that we sell out of this oil reserves is actually natural gas. And we are a big exporter of natural gas. In the past, oil prices went up, natural gas didn't. And then we didn't benefit that much because we are a net oil importer actually. but a gas exporter. So gas is the LNG, you know, the one that you use to cook one, right? But we export that, so that's a good thing. But luckily for us, in 2022, right, the price of natural gas has also increased due to the global things which I mentioned: Russia-Ukraine war, COVID imbalance, etc. So we are a net beneficiary, and I think if you look at Petronas' latest announcements of their performance, it's been pretty good, right? On the other hand, because we have subsidized oil, right, to petrol to Malaysia, pumping petrol in their cars, right? When the global oil prices go up, the subsidy also goes up, right? So the cost of subsidizing us by the government goes up. And I think this has been in the news. I don't need to say too much which minister said what, but these two impacts tend to balance each other out. In fact, I think it's a very neutral impact. The only way to solve it, unfortunately, is for the government to start removing some of these subsidies, which I think they're starting to look at doing already, looking ahead. So I think it's something that we can talk about later, but consumers need to be prepared.
Wow, okay. So it seems like inflation is just one word, but it's actually a chain effect across all sector, all industry. So, Han, maybe you can explain, is actually inflation totally bad? Is there a way that, you know, a country can actually achieve no inflation, stagnation, zero inflation? If we can achieve zero inflation, is it a good thing? Or inflation, maybe they have some benefit, or inflation is totally bad actually?
A very, very complex issue. I think a lot of PhD in economics also will argue with me or argue with you on this. But I think most people agree that what you want is a Goldilocks inflation rate. So let me explain what a Goldilocks inflation rate means. What it means is not too much and not too little, right? So you need some sort of small inflation for a healthy economy, right? Too much is very bad for all kinds of reasons, including, you know, hyperinflation. Suddenly you wake up, you have to use a million ringgit note and things like that. Very bad for hyperinflation. Too little inflation, what you might see in the long term is actually no increase in wages, no increase in salary, right? Lower growth, because people are not confident that when I make products, they will have higher value tomorrow. So it's also hard for businesses to grow. So I think what you want is a little bit of inflation. How much is little? Somewhere between 1 to 3%. Most people settle on 2, right? And this also feels right, lah. If you have zero inflation, means we'll be stuck with stagnant prices the whole time when the rest of the world is growing, and we'll be stuck where we are. If you have too much inflation, I don't need to explain too much how angry that makes people feel. But it's not just about angry. Is that my money today will be worth almost nothing tomorrow. So that's something that we always, I think economists try to strive, make the central bank strive, which is a Goldilocks, just nice, not too hot, not too cold, 2% inflation is what people think is right.
So, Han, what you're saying is, if I can get it correct, so to those that are actually joining, inflation is actually not all bad. So we actually need a little bit, like you said, Goldilocks portion of the inflation to actually further drive the economy, right? But like you said, too much is a very, very bad thing. So we know too much, everything so expensive, but your gaji only still remain more or less the same. Haya, susah lah. Normal, you eat 2 bowls of rice, maybe 1 year later, you can only eat 1 bowl of rice with the same money. So in short, Uncle also want to stress again, inflation is actually all not too bad. But with the current situation, with the hike in all these prices, in terms of food renovation, renovation raw materials and stuff like that, right? So maybe Han, you can maybe tell us a bit more before we move on to the increase in interest rate. Could you tell us a bit more which factor is actually impacted the most currently? When Malaysia, when our listeners and Malaysian can actually expect what is actually impacted now, and probably from now until end of the year, what other sectors that they should anticipate that that will have a further price increase?
Sure. I think what I'll say first is, you know, official CPI or core consumer price index, i.e. inflation rate in Malaysia today is about 2.3%. What this means is, on average, there's a basket of things will cost you 2.3% more than the same time last year, right? But this doesn't tell the full story. You think, hey, 2.3% sounds quite low, good, right? But if you look into what's inside this 2.3%, what you'll see is the food component, which is the biggest, 30% of this inflation rate, is up by over 4%, which is really starting to get very unhealthy, right? And we can even see that if you break it down into this food inflation 4%, things like chicken specifically is up 11, eggs are up 23, cooking oil is up 37 since the same time last year, end of April, right? So these are very specific items which I don't say we all use all the same amount, but everyone has a sense of, okay, most people can eat chicken, most people eat some sort of egg, most people cook with oil, right? So these are kind of things we expect to go up. But the problem about this is, it's not just these items, right? If you think about my earlier point about the Russia-Ukraine war impacting specific things, wheat, we don't actually know what goes into wheat. Actually, we do. Bread, right? Bread is the number one, wheat is the number one ingredient in bread, right? So we can expect, our gardenia, Massimo, all this to start going up, even though they already went up in January. Don't be surprised if it happens again in the next few months. Don't get too angry. It's just global food prices there, right? And the most important thing to take note for this coming few months is the petrol subsidy, right? And what I mean by that is, if the petrol subsidy gets removed slowly or changed or removed outright, it's not just our petrol pump will get more expensive. That one, we all know, we all get very angry, right? But it's the knock-on effect to businesses. If you are a business which needs to transport your raw material from one end to another end of town, or up and down the city, or up and down the country, or you need a lot of petrol or diesel in your factories, your costs are starting to go up, and this will affect everything, not just pumping petrol in my car or my motorbike. I get very angry. It's everything. Petrol impacts everything. So that's one thing to watch. When you see petrol prices starting to go up because the subsidy is reduced, you can expect the entire economy to experience higher inflation. So that's the kind of thing I would say. And then the last is imported goods, things that we import, right? Even though if petrol subsidy stays the same, if you buy a lot of imported goods, you can expect this to increase dramatically. Two reasons: the ringgit has depreciated. We discussed that earlier already. And second, supply chains due to those ships that are stuck in a port in Shanghai, for example, will cause shipping to go up. So your imported foods, imported goods, imported clothes, glasses, all that will start going up because of this point.
So actually, I mean, looking at all these things are not looking too good lah. Uncle will think that things are not looking too good. And our viewers here must understand that we are not trying to make you feel sad, or it's already doomsday and what's not. Maybe Han, you can actually enlighten us a little bit that when is this more or less going to end, or go back to normal, or slowly reduce? Based on last time track record, what's going to happen? When can we expect things to more or less get better from now? Like you mentioned, things are expected to go a bit bad or worse in probably now to the end of the year. But when can we expect things to actually improve?
What I would say is, nobody knows for sure, obviously. No one can predict the future. But what I would say is, I can see the actions of governments and central banks around the world trying to address this issue together, which is quite a good thing, right? What do I mean? They're trying to reduce demand slightly so people don't feel like going out too much, right? Which gives businesses a chance to catch up with the demand, right? And that should help with inflation, right? How are banks, central banks and government doing this? They are increasing interest rates across the world, including in Malaysia, right? So the Federal Reserve in the States, Bank of England, RBA in Australia, even the Bank of New Zealand, and our own central bank, Bank Negara Malaysia, have started to increase interest rates to kind of cool down our demand a bit, so people don't feel so like, oh, interest rate is so low, I might as well spend rather than save, right? To reduce demand a little bit, so then supply chains can catch up. And then I can't predict what's going to happen with the war, But hopefully, as people start to either the war ends in Ukraine or the world starts to adjust to this new reality of a conflict and start to increase supply of oil back into the market, increase supply of natural gas, start planting more wheat farms, not in Ukraine anymore, but around the world. Hopefully within the year, like things will start moderating again. Now, if you look to the past, in the late 70s, right, there was very bad inflation. You're talking 10%, 20% type. It took 2 to 3 years to really get it down and get it to a more manageable level. I hope it doesn't take this long this time, all right? Hopefully by next year, this will be done, right? So you as a consumer, as a rakyat, you just have to prepare and write it out if you can.
Okay, so let's just go to the next point. I think a lot of people here would actually be quite interested also. Now we talk about food price, we talk about petrol price. I think every day we got consume, we got use one. Now the third one, I think was it a week ago or a couple of days ago, Bank Negara actually announced that there is an increase in interest rate, which you have covered just now briefly on the hike in interest rate and stuff like that. But can you tell us more? Why, in your opinion, why is there an increase in interest rate? And how does it impact our day-to-day life as a Malaysian, like a house owner which is actually on a mortgage loan, or a car that has also car loan? So what normal Malaysians should expect from this hike, and why they actually increase it?
I think I'll answer the second part first, I guess, because it's a very sensitive topic. Money out of my pocket, right? So it's very counterintuitive. Why you do this, Bank Negara? I thought prices going up already, right? How come you increase rates some more? Then my home loan price goes, my home loan installment goes up, and I even have less money. Why would you do this? And I don't say unfortunately, but that's just why is one of the tools that central banks, including Bank Negara, have to combat inflation is to increase interest rates. And why is this even a tool? Why? It doesn't make sense. Why does it make sense? Inflation typically is caused by too many people trying to buy too many things from too few suppliers, right? So we talk about food and oil and all that already. But by increasing interest rates, right, the central bank or Bank Negara in our case will reduce demand for buying things. Why? Because if your interest rate is higher, naturally you feel like, if I keep it in the bank, I get higher interest, right? Then I don't spend that, right? I keep it in the bank. So that's the natural thinking for most of us, and also businesses. When interest rates go up, you don't think of going out to spend. You don't think of going out to put your money in all kinds of places to increase the demand, right? So that's why they do it, right? And if you remember, hopefully some of the viewers remember 2 years ago when the opposite happened. Suddenly everybody locked at home, there's no demand, everyone's just sitting at home not buying anything. Bank Negara reduced the rate very dramatically from, I think it was 3% at the time, down to 1.75. So it's a very big jump, 1.25 jump, to stimulate demand, to say, hey, look, I reduced the rate, so don't keep it in the bank, try and spend, save our economy. Right now, the opposite is happening, which is Bank Negara needs to start increasing the rates to kind of temper our demand, make us not feel like going out so much, not feel like buying so many things, not make businesses not feel like investing too much in things, such that it reduces demand a bit to reduce inflation. Then as a seller, I don't feel like I have to increase my price too much, and I can still support, the demand is able to support how much I can produce, right? So that's why they do it. But what does it mean for us as a Malaysian, as a rakyat, as somebody with loans? Now, for those of you without loans, you won't be impacted. But unfortunately, that's not a lot of us. Most of us have some sort of loan, including me, myself. I have a home loan, a car loan, etc. And we will feel the pinch. How much? For every 0.25% increase in the rate, and that's what the normal increase is, what you'll feel is an increase for your home loan about, say, 35 ringgit a month, if for every 250,000 loan. Wow, very complicated. Let me try again. Okay, so let's say you have a 500,000 ringgit home loan outstanding. Every time the rate increase 0.25%, you can expect your installment increase by 70 ringgit, 70. So 500,000 loan, 70 ringgit. Now, sounds painful, right? But there is more to come. even Bank Negara has started to signal we have to handle this inflation problem. There may be 2, 3, 4 more times this will happen over the coming year. So we have to get prepared as a customer, as a consumer, as a rakyat. Prepare for this 70 ringgit for every 500,000 loan that you have every time the rate increases. So it might happen 2 more times. It might happen 3 more times this year. But the key is to get prepared, right? 70 ringgit is a lot of money every month.
Wow, uncle here, uncle also a bit headache again like that. So it seems like okay lah. Like Han, you have mentioned the reason why the government is actually increasing the interest rate is actually to slow down the market and ask people not to spend so much, this and that. Now, this next segment, right, I think would be the most interesting one. We have got a bit more time, so maybe Han, you can actually explain a bit more. So, is there a way for a normal Malaysian like uncle do anything about it? No, you have mentioned that price increase, interest rate increase. Try not to go out so much. Try not to spend so much. Is tightening the belt like normally uncle eat 2 bowls of rice. Should uncle eat now only 1 bowl? Last time, like you say, the wheat price already increased. Last time uncle eat 2 slices of gardenia. Should I now eat 1? So is tightening the belt the only way for us to fight through this, or is there any other way that we can do it? Maybe
Yeah,
in the form, maybe in the form or investments and stuff like that.
I talk about us as a rakyat first, as a consumer, as a rakyat going out. What can I do about this? Inflation is coming, it's already here, and it's not going to stop for a while. What can I do? I think there's a few things to do, right? The first is don't stop eating, Uncle Robin. You got to eat, right? But what you might want to consider is for those temporary shock items, for example, the bread, which is like the wheat and the pasta, right? Plus things like chicken, you might want to consider substitutes. So for example, the rice market globally seems to be quite stable still, right? So, as in, I'm not saying don't eat this, but hopefully the shocks for wheat and corn and soybeans are temporary. In the meantime, right, rice is unaffected so far, right? So we don't expect significant inflation in rice because it's, Russia or Ukraine doesn't produce rice, for example, and rice is plentiful in Southeast Asia. So for us, I will be eating more rice, not because I want to, but because if I don't really like the temporary shock, I don't want to add to the problem by buying some bread because everybody is also buying bread. Maybe I can eat some rice. So substitution is natural. Now I'm not saying this, as in I can say this because I'm not the minister, so don't get angry at me. I'm just saying if I'm a consumer, that's what I will consider doing, right? Rice-based stuff rather than wheat-based things. So substitution is a good one, right? Hopefully don't eat less, eat what you need to eat. Second, I guess is very, very important, which is do your price comparison. Now at Ringgit Plus, we believe very strongly in comparison. When you want to choose something, right, get a list of things, compare between them. We do this for credit cards, we do this for loans, we do this for insurance. So why shouldn't we advise people to do this also for their daily goods? One of the reasons why it's important to do price comparison is because sometimes some shops may not have the same price and some shops may be more expensive than each other. And it's not because of inflation, it's because of specific reasons, including profitability, including maybe they don't have enough stock of a specific item, so they need to increase the price in the short term. Not because of inflation or anything, it's just because they're managing the demand, right? But there may be some shops also which are doing excessive profiteering, right? Which means by comparing, you can then get the best price for you, right? It's not your job to support the economy by paying extra money, right? You get the best price for you by comparing, right? And I think that's one way you can defend yourself against not just inflation, but people who take advantage of inflation to take advantage of us, right? The third thing I think is very important to do to avoid the second thing from happening is to report these profiteering companies to our authorities, right? KPDN, HEP, right? The Kementerian Hal Ehwal Pengguna, the Consumer Ministry, right? You don't have to walk there. You can even SMS, WhatsApp, email, Twitter, Facebook. You can YouTube them now. So there's so many things you can do. You take a picture. Hey, this price doesn't look right. It's very expensive. Can you check it out? The ministry is there for that reason. So you should use them, right? most the people, hopefully the watchers who believe that, you know, as a rakyat, we have to also stand up for our rights. We have to make the ministry do the hard work for us, right? So that's kind of three big ways as a kind of pengguna, as a consumer, that we should, where we can behave, right?
Yeah. Let's, before we actually move on to the investment side of things, so like what Hans said, I think it's very, very true. So at times like this, we must be more diligent and more rajin when it comes to price comparison, like what Ringgit Plus has actually been doing. So uncle know, every time I want to apply credit card, sure, go to Ringgit Plus, compare this, compare that, what benefit this, what benefit this. So not only, right, on your daily, you need to compare which car to buy and stuff like that. So at this current juncture, you must also pandai to go and compare. Okay, if I buy this thing here, if I buy this thing there, why the price difference? Then we need to investigate. Is it this particular business trying to, you know, makan more untung, but it's actually not because of inflation. So we must be very smart about this lah. So we've got actually one question from the floor before we go into the investment side on how that we can actually work better or counter the current situation. Okay, this question is from must be very shy person, anonymous, don't want to put name one. So the question is, right, I would like to get a new car. With this increased interest rate, I'll have to put it on hold, right? How much longer you predict that I have to put on hold?
Wow, difficult question. First off, nobody can predict where interest rates will go forever, right? But in the short term, what I'll say is, if you cannot wait more than a few years, better don't wait. Reason why I say this is, the last time interest rates were not at this level, i.e. they were higher last time in the 3% range, they were like this for over 10 years. So I don't think you can wait 10 years. In fact, I would say if you need to buy a car today, better to buy today than in 6 months' time, because, you know, the signal has already been, rates are going to increase, right? And my prediction, and please take this with a pinch of salt, I'm not an economist, but I can see it happening across the world, the same thing happening, increasing every month for the next 6 months, right? Is that there will be another 3 to 5 increases over the next 6 to 9 months. So if you want to get a car with a loan today, might as well try and fix the price of the interest today before it goes up. So conversely, the converse is true. I don't know what's going to happen long term. It could crash again, but I can't predict that. What I can tell you is the signal is interest rates are about to rise further beyond just this recent 1.75 to 2%. It might go up further, and it might go back to where it was, which is 3%, which seems to be where Ben Negara was comfortable holding it for many, many years before the pandemic. So it might be 1% higher this time next year. You might want to fix it today.
Yeah. So you got it, Mr. or Mrs. in anonymous, very shy person. So let's move on. I think our listeners would be very interested. Okay, I know what is happening with the food, the petrol, and everything else, logistic and what's not. Yes, it's impacting me day to day. What can I do? You have talked about spending on certain things, substitute, for example, bread to rice. Example only lah. So substitute in what you buy, which to items that are not actually really affected by inflation. So, but like you said, the housing loan, car loan, all this, a lot of people cannot escape, like petrol cannot escape. So is there a way instead of cutting in our spending? Why don't we try and increase our income in the form of investment? So are there any investments out there that, you know, Han, maybe you can talk a little bit more in detail, you know, to actually more or less counter our money and our depreciation in money and the current interest rate hike?
No, for sure, Ken, for sure. I think there are many techniques we can use as a smart investor, right? And as a financial planner, I always tell my members, clients, the following, right? Number one, make sure you're covered in the short term first, meaning if any big shock happens, whether it's a recession, massive inflation, whatever it may be, make sure you have an emergency fund just in case, right? You never know. Just in case, have something emergency. How much not too much, but about at least 6 months of spending power, right, that you have. There's no better substitute than to build up some emergency funds if you don't have it, right? Because guess what? High inflation or recession is an emergency after all. You might think I prepare enough money per month already. Suddenly big inflation, you need that emergency money, right, to top it up, right? So best is to prepare yourself with an emergency fund first. Now, for most of hopefully your watchers already have one because they've been watching you for the last few times. They are on the way to financial freedom. They already have emergency funds. For the longer term, right? Try not to keep too much money in your bank account beyond that emergency, right? Invest rather than save. And why do I say this? Because the difference between 2% interest in a bank and 6-7% interest on investment in the long term, which is very achievable, right, is huge, right? 2% is most likely below inflation today. 6-7% is most likely above inflation today. So having your money well invested keeps you defended against inflation, right? Because inflation go up, never mind, my investment can match it or beat it, right? Now, for most people, right, who are not stock gurus or investment gurus, just being invested is good enough. What I mean by just being invested, don't think too much. Whether it's simple Amanah Saham, Bumi Putra, ASB, earning 4 to 5% dividend a year, or EPF for most of us, earning 5 to 6% a year, already is better than just putting 2% in your bank, right? You will most likely be at or above inflation. So both are way better than holding too much cash. Okay, but for some of those investment guru out there, right, looking to choose which specific investments to put during a high inflation environment, I think go for the big three. What is the big three? Number one, energy and commodities, right? So for those of us who are hearing, wow, oil price going up, wheat price going up, soybean price going up, you can actually invest in these things and say, hey, look, can I buy some oil and wheat and other commodities? You can actually do that, and you don't have to store it in your house. No worry. There are some things called commodity futures or commodity ETFs, which allow you to make money or gain when there is increase in those commodities. But just be careful. You know, if suddenly those commodity prices starts to drop, inflation is lower, yes, but then you took too much risk, you might end up losing money. So just be a bit careful. You can put a little bit in there just to say, hey, look, even if it goes up a lot, at least I'm defended against inflation by my commodity ETF or commodity investments going up. So that's the first big three. Number one, commodity and energy. Number two, gold, right? Gold is a natural inflation hedge. Now, I generally don't encourage gold investing because I personally think there's only one or two purpose of gold, which is one of them is to defend against inflation. Just so happen we're in an inflation environment, so you can buy some gold. Previously, I wouldn't recommend it though, because it has no specific value other than this, right? Holding some money in this kind of gold bar type thing, right? And number three, and the part of the big three is real assets. What I mean by that, real estate. What I mean by that, property, right? All kinds of property. Why do I say property is a good inflation defense? Is because properties are a big component of inflation, right? Housing costs go into the inflation index. So between your energy and commodities plus real estate, you've got a lot of components of inflation already, right? So for those investment gurus looking to make specific sector investments, these are kind of the big three. I would say, hey, like anyone's involved in energy commodities, anyone involved in mining or storing gold or gold itself, or anyone looking into real estate, right, or property essentially, right? You can even do it via a REIT, a real estate investment trust. Don't have to go out and buy a property. Not everyone like can afford properties. Definitely not myself. I cannot just go out and buy one now. But I can invest a little bit into a real estate investment trust. Just to do it through your CDS account, no problem. So these are kind of things where you can do to defend yourself against inflation.
So basically, what Han, you have mentioned all these investments, like for example, commodities, gold, and real estate. I believe that it is a so-called income generator and not and it's not a capital gain kind of investment, right? Because it is I mean, in a way, inflation, things increase. So, somehow I would want to increase my income to actually, so-called plug in this inflation gap that my lifestyle need to spend one lah, right? So, Uncle also got one question. So, I mean, you talk about the three types of investment. Uncle got this question. I would assume like commodities, gold, and also real estate, you can do it in Malaysia. What about investments abroad? I mean, what are your suggestion or not suggestion, or maybe your opinions about investing probably in the US market or in the European market or in the China market? Because in a way that not maybe it may not be able to hedge inflation, but it can hedge against the weakening of weak ringgit. So it's actually already good enough. What is your thought about that?
Personally, and I tell this as a financial planner to all my members and clients, is try to diversify. Don't choose a specific country, because you never know which country next might be impacted by a specific problem, be it war or racial riots or whatever it may be that impact that specific country. So try to diversify, right? So if I have some money today to invest in the global markets, I'll be okay. I invest some in those three sectors which I mentioned, right? And maybe some in Malaysia because I live here. But I may also look at the US. I will also look at Europe. I will also look at Asia and Japan and China, etc. Because I don't want to be tied to a specific country when something specific happens. Imagine if I had all my money into a Russian stock market. Right now, I'm feeling very stuck, right? So here, a classic example where try to diversify. You can't go wrong if you mix and match around and put all your eggs into different baskets, not into one single basket. So that's what I'll say. I forgot one more thing to invest in, which is 100% you must do, 100% recommended, 100% sure win one, which is invest in yourself, right? To beat inflation, the number one thing that can help is to increase your personal income. Now it's not my job to set minimum wage. That's for our politicians, that's for our policymakers, and we should all pressure them to do better for us, yes. But what we can control is what we can control, which is our own situation, right? Which is, if I try to increase my capability, invest in my skills, and hopefully increase my income, that is the number one way to defend against inflation. I make myself so valuable to my boss and say, hey, look, I have this XYZ skill now, ABC skills, whether it's digital design or graphic design or public speaking or debating or report generation or Excel, whatever it may be, right? Say, I have extra skills which can add value to the company should recognize that value, increase my income, right? And, one part is in fixing our wage problems here in Malaysia. That's for our politicians to do. The other part is to increase our skills so that we can increase our income as well for ourselves, right? Which can be the best defense against inflation, the investment in yourself.
Yep. So for those who just listen to Han, so maybe at home you actually do your own cooking for your own eat one. So if you cook very good Maggi goreng, so you can actually invest in yourself, watch some YouTube, some gather who's this name, Gordon Ramsay, how they do it, or maybe Uncle Roger do the fried rice. You can also do a side hustle, and also make some income from that. So jokes aside, Han, so let's just put it this way. So we have probably about 10 minutes left. So can you actually summarize 3 takeaway points before we actually say goodbye to our fellow viewers here? 3 takeaway points.
Yeah, sure. Number one, right? Inflation is both a global problem as well as a local problem. So global meaning things happening outside, and also local in Malaysia. So don't just blame one thing, it's a lot of things. So inflation is a global and a local problem. Number two, closer to home, we need to be prepared. Second thing, we need to be prepared against higher inflation, higher price of items, not just gone before, but coming soon, right? The next 6 months, there will be higher prices of all our goods, including food, petrol, goods, services, things we import, right? And including our home loans and other loans which are linked to interest rates. Things are going to get expensive. Better prepare. And number three, so many ways to prepare, right? Invest well, prepare well, right? Prepare well your emergency fund, invest well to beat inflation. So those are the kind of three things I will leave hopefully your viewers with. And hopefully we can all ride this through together. Hopefully this all ends this time next year. And we will have a much better situation globally and locally.
Yeah, and of course, most importantly to those who are listening, don't panic. I mean, the country or the world has been through worse times, but like what Han said, most importantly, don't panic and always invest in yourself. Let it be knowledge or let it be in whatever special skill that you have lah. So don't panic and just stay persistent, stay calm and invest in yourself. So okay, we take one more question. This one last minute one. Dino Omar. I don't know what he mean by joke, still unclear. So he asked, should I save or invest in low risk places? Yeah.
Okay. In short, my general recommendation is, right, if you don't have emergency cash, right, to handle a recession or massive inflation, right, make sure you start building up. So should you save? If you don't have emergency cash, definitely start saving this cash cow. How much? 3 to 6 months of your spending, just in case, right, that the world ends up getting worse, number one, right? If you do have a good enough cash cow, say 6 months of salary, 6 months of expenses, it is the same, then you should really actually look to invest. Don't keep too much because inflation will start eating at your cash, right? You've got to invest definitely higher than 2% at the bank. If you're not sure where to invest, stay safe, put it into EPF, ASB, that kind of thing, where it's going to be higher than the bank and hopefully high enough to beat inflation, right? And only go super risky if you have the confidence to invest and you are sort of an investment guru. But most of us can already beat inflation by investing very low risk, right? Places like ETF, Amanah Saham, right? So I think I'll leave you with that. If there's any more complicated stuff, you can speak to me or my team. We're happy to create specific portfolio for you.
Yep. So we got one more question. This one is from Shazana. If first time to invest, which market should I start to invest first, local or global? Or also maybe Han, you can share a little bit how they can actually do it.
Sure. I'll tell you a little secret, right? Actually, if you actually invest in EPF, EPF actually invests in global equity and real estate already. So by putting money in EPF, you are having both local and global investments already, right? So if you're worried, hey, look, like I don't want to invest all in one place, it's just EPF. Actually, EPF is very, very diversified. So that's just one thing to say. But if you want to invest yourself, you don't want to give it to anyone, including EPF, right? That's totally fine, right? My recommendation is to do both, right? Don't put all your eggs into one basket, whether it's a local basket or put all your eggs into America stocks, for example, like invest in that in one market, right? Try to diversify across as many markets as you can, right? Even if it's you have only like say 4,000 or 5,000 or whatever, you put 1,000 in each market, no problem, right? It's not that expensive to do. You can do it actually via local brokers itself. So what I mean by local broker is you find the local securities dealing companies, right? If you're not sure where to find this, Securities Commission has a website which you can see the list of securities dealing companies. Open a stock trading account, buy some stocks if you want. If you're not confident of choosing a stock, don't go and do that. Invest in diversified things already, such as unit trust, ETFs, right? And you can do that through fund managers. Again, if you're not sure where to go, Securities Commission has a list of all fund managers available. You can go and check it out. For most of us, though, choosing is a risk, right? I like to stay safe, go with someone which I know very few long-term investors can beat a diversified portfolio like the ETF, for example, right? So that's just a few things. I can't say too much in this short time. If you want to find out more, come to Ringgit Plus and we'll help you out.
Yes. And one last question. So this one, if let's say, this question also from, I think anonymous again, also very shy person. So he or she is actually asking, so what if I am very super safe one and the OPR is actually rising? Does it make sense to only, I think what he or she is trying to ask is, would it be sufficient to only put all my money in FD?
Yep. Very good question. Two things. Number one, what I said earlier was, if you're afraid of inflation, right, an FD is not going to help you, right? It's going to be likely lower than inflation, right? Certainly is this year. Now, the second part about that is, if OPR is increasing, you don't want to put into such a long-term FD. Why? Because you'll be stuck on this low rate as OPR is going up, right? Without the opportunity to then go into a higher rate, right? So what I say is, if you're afraid of investing, no problem, right? If you have a home loan which has a flexi feature, that might be a better place to put than an FD. Why do I say that? Home loans with flexi features will allow you to put your money to offset your home loan balance. So then you actually pay interest on less of the home loan, right? Because your home loan is this much, right? You pay less because you put your spare money there, right? And most home loan interest rates will be higher than any FD interest rate out there. So that's a good place to put, right? If you have a home loan, right? And allows you to have flexibility. Interest rate go up, you actually save more because you have saving more on the interest of the home loan, right? So I think that's hopefully some ideas to think about when you think about FD. Beware of the increasing OPR, you might be stuck on a low rate. If you have a home loan with a flexi feature, put it against it, and then you will save money there.
So you all can hear. So let's just take one final last one. Also from Dino. Okay. He said, all investment sounds like a good idea until it isn't anymore. What should we not invest in?
Wow, that is very philosophical question. Okay, I think the number one thing that you shouldn't invest in is something you don't understand, right? And I know that sounds very, very funny, but I'll explain why. If I say, hey, invest in companies, you generally understand what companies do, right? You invest in a bank, you know what a bank does. You invest in a petroleum company, you know what a petroleum company does. So you have a sense of whether it does well or not based on the market situation. Oil price go up, petroleum company should do well, right? Example, right? If you don't understand an investment, don't invest in it. Don't invest in something just because someone says, oh, this one is good. That's believing a person, not understanding their investment. And this applies to everything, including stocks, even cryptocurrencies, NFTs, things like that, right? People who make money and invest in those things will generally understand them better than other people, right? So number one, don't invest in something you don't understand. That's all I can say there.
Yeah, because a lot of time, uncle also got here, don't know which auntie or uncle say like, hey, my son say this investment good, this investment good, but they don't really know what they are actually investing in, just trusting in whoever they're actually talking to. So, okay, Han, thank you very much. And I hope the listeners and the viewers tonight here can actually get something out of it. And most importantly, if you all want to know more or you want to maybe apply any loans, apply a loan now. Like Han said, if you really need a car, go and buy a car now instead of waiting, although the interest rate is actually higher. Or any house loan that you need or whatever, which bank or credit card, always go to Ringgit Plus lah. They get actually very good comparison feature inside there one. Okay, so before Uncle and Han leave this episode, okay, don't forget lah, rating very important for uncle. Uncle old already, so need some encouragement to continue going with this. So please rate this session 5-star lah, free one, and no inflation one, and no interest one. Just press only, click only, okay? And also if you like what Astro AWANI is actually doing right now, join in into the next session. This next session the topic is actually cukup Malaysia kah Anda? Wow, Uncle will try and actually speak in Malay lah. Uncle try. Cukup Malaysia kah Anda? Persoalan identiti dan representasi orang Sabah dan Sarawak. So it is coming this next Thursday, Kamis, 2nd June 2022 pukul 11 pagi. So if you are interested, you know where to go, which is to Facebook Live Astro AWANI. Okay, please join in. So once again, thank you everyone, and thank you Han for giving us such insightful info. At least we know that inflation is happening, more or less what it will impact. And actually inflation is not all that bad, and there are ways to actually counter and help yourself. So okay, thank you everyone, and thank you Han. Thank you very
Thank
much,
you.
and
You're
good night.
welcome. Bye. Good
Bye
night.
bye.